Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, December 15th, Thursday, the day after the FOMC interest rate decision yesterday and what Powell said. It's super interesting. We are going to review the most important statements that Jerome Powell said yesterday that pushed the market really high. And today it's also a day in which the Bank of England and the European Central Bank both made the same decision to keep the interest rates at the same level, the same as the Fed. And the Bank of England went higher, European stocks went higher, but we have to look farther than that. Don't be naive and really analyze what is happening, because we have right now 5 days trades in the green, breaking 2023 highs and really having a big push momentum higher. Don't get too comfortable, because at some point we are going to see the pullback, and today is that day. I have several nuances that I saw that will make you really think twice about going long today. But first, let's review economic data for today. And that pass goes through retail sales really strong, 0.3 when we were looking for negative. Initial jobless claims went lower, we were looking for flat. And continuous jobless claims, the only thing going higher, but we were looking for more. This is a more or less okay, but this is a miss, and this is a miss. So that, coupled with the fact that the interest rates in all three most important banks for now to trade the US markets, that is the Federal Reserve, the Bank of England, and the European Central Bank, all three paused rates and are already looking to the horizon saying we are going to cut at some point. So when we reach the top and we start cutting, it's because the economy is getting weaker and weaker and growth is affected. So don't be surprised if we just continue seeing momentum to the downside, because the interest rate cuts are around the corner. In terms of what Jerome Powell said yesterday, I have some notes here that basically he said that activity in the housing sector has flattened out. The labor market remains tight, but is coming to a better balance. Let me just copy a little bit of this and just bring that up, because look at what he said. Basically, the activity in the housing sector has flattened out. That's a check. The labor market remains tight. It's coming into a balance. That's good. Labor demand is still exceeding supply. That's okay. That's dovish. We are prepared to tighten policy further if appropriate. Obviously, the goal is the 2% inflation. That's a little bit of a miss. If we see a little spike after holidays of inflation, be careful, because a new hike, surprise hike, will happen. It is not likely, though, that we will hike further, but look at this. We are starting to talk about cut rates. Inflation is making real progress. So all these sentences are sending a message. There's always probability for a recession, but inflation has come down. We are seeing that. But the result is not guaranteed. That's okay. You need to. And look at this, we are aware of the risk that we can hang on too long on rates. We are focused on not making that mistake. So cuts are happening. This is in terms of what Jerome Powell said. And this is really important to really assess, because the market will at some point start going down thinking about earnings. And you have to really think about it. Be careful, because now earnings are starting to be priced in next year's 2024 earnings. And Earnings going lower, growth going lower means market going lower. It doesn't matter if inflation is also going lower, because these three are what rule the market until now. This is the Nasdaq 1 hour. Yesterday we have this big move. Look at this order block down here, and we took these two basically 2023 highs on the NQ. Let's see the levels. We took these levels out. All these three levels from December last year were taken out yesterday. So the liquidity grab has already happened. We have already taken all the liquidity that was needed for the market to really see lower pricing. We are moving after taking liquidity. So be careful, because the upside risk it's quite high, and the downside potential it's really juicy. So don't be naive. Really take a step back and think twice about how much higher can this market go. And that affects the NQ, the S&Ps, the small caps, the Russell, dollar. Even though dollar is being basically destroyed today, 1% down, the NQ since the open, and look at this, the NQ since the open is, so the open was here, it's 0.30% in the red. So be careful, because this was the only trade that I took. Why? Because we had this liquidity up here. We didn't take this one. That's why I was quite hesitant to really going big. That was just one contract today. But we took this liquidity into the open. This liquidity and this liquidity. So we tried several times to go higher, and look at this. Fair value gap, rejection, and the first candle making a new pivot low. That's where I took the trade. Stop at this candle, because if we pass this candle, I mean, it's over for me. So basically 27 points of risk for 24 profit. That's a 1.30. It's not optimal. It's not ideal. I don't usually take less than 1.5 risk reward ratio, but I think this was a pretty nice move towards this pivot or this pivot. I finally took it here. We bounced, and we are, since then, look at this. We are making progress to the downside. Last thing I would like to mention before moving into small caps and yields, these pullbacks were not normal. I've seen 226, 219, and 160 something order blocks red on the bid, because big money is selling all this. Why? Because they basically want all this market, they want a correction up here. We just blow out, and I think the move is to the downside. Even though I would like for markets to continue go higher, check that out. 1 hour fair value gap, 4 hour fair value gap, 1 hour fair value gap, tons of liquidity down here. So if we want to move higher towards the end of the year, the infamous Santa rally, I think markets will try to gather as much sell side liquidity as possible, if only if we are going to push again highs into 2024. That might happen, but we need a proper pullback. As I was mentioning, dollar is being destroyed today, 105 in the red. Look at this. Huge move. Gold is just skyrocketing higher, and small caps are flying. This is what is fueling the S&Ps. This is why this is a huge gap. This is why even though the Nasdaq is in the red, the S&P is 0.28. Banks are really big in the green. Why? Because outflow from tech is coming to small caps and banks for earnings now that interest rates are going to be cut by a lot next year. That move has a name: earnings play. That's why I was mentioning earlier that inflation is no longer the focus. The focus right now is growth. And the NQ versus the S&P, I think S&P will offer better earnings than NQ that is super overbought. That can change. That doesn't mean that I'm going to right now trade the S&Ps. For you to really understand what is happening, there's a rotation ongoing from the big tech companies to the growth companies, to the earnings play, to the small caps, to those big stocks that were so much undervalued due to interest rates, that now that interest rate cuts are in the horizon, investors are jumping in due to that. So it's as simple as that. Think about that and prepare for a market into the end of the year. Some kind of a forecast. For me, the line in the sand is yesterday's 1 hour fair value gap. If we can hold this, perhaps tomorrow we can see a Friday squeeze. If we start seeing that the market continues through that and completely destroys yesterday's big FOMC candle, oh boy, I will be looking for shorts towards this liquidity down here and also this one. I mean, there's a lot of juicy liquidity down here. If we check the 4 hour, look at these huge gaps. I stopped putting all the fair value gaps that are in the low side because it's just, I will just chart those when we approach them. But for now, just think the amount of liquidity that is resting down below. That would be the primary justification for you to think twice about taking longs today. And I think that's all from my side. I think the market is going to continue lower. The Nasdaq, if you are looking for longs, don't look at the Nasdaq. If you are looking for shorts, look at the Nasdaq. The S&P is stronger than the Nasdaq. The S&P just took pre-market pivot low. We try to move higher, but look at this. It's not respecting the fair value gaps nor the liquidity today, at least at these levels. We have to go lower to really gather more liquidity to continue higher. That's the key of the market right now. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. I hope you are having a nice trading week. There's been a lot of volatility, but also risk. Be careful and remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.